Good afternoon and welcome to the Asian Midday Marketwatch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Kelvin, as always, thanks for coming in.
Hey, my pleasure, Brian, as usual. Yeah.
Now, Kelvin, before we get your insights, I'm going to take a look at crypto markets and then take a look at how markets in the region are performing. So if we look at crypto markets now, we see Bitcoin at 58,826.5. It's down 3.93%. Ethereum is at 3,999, just under the 4,000 mark. It's down 6.52%. If we look at how regional markets are performing, it is a sea of red. We see the Nikkei at 28,802. It's down 1.02%. The Shanghai Composite is at 3,529. It's down 0.93%. The Hang Seng is at 25,604.81. It's down 0.09%. The ASX 200 is at 7,422.4. It's down 0.35%. The Kospi is at 3,030. It's up 0.17%. The SGX is at 3,205.55. It's down 0.39%. And rounding up the numbers is Bursa Malaysia, which is at 1,571.72. Sorry, 0.62. It's down 0.72%. Now, Kelvin, what's your view on regional markets and their performance this morning?
So what we could see is a bit of profit taking coming into place. So actually this happened also coincide on the backdrop of a more softer performance seen in the overnight US stock market. So what we could see over here is that in fact majority of the US market ended red after hitting fresh all-time high earlier this week. So you see the S&P 500 down, the Dow Jones down, with the exception of the definitely Nasdaq 100, which is being held on by several skewed stocks that's heavily weighted towards the technology sector, like Microsoft is up 4%. Then definitely you have Tesla as well, which is actually up close to about 2% yesterday, since rallying above $1,000 mark. So that's a bit skewed over here. But overall, the US market now has entered a period of a bit of overextended rally in the last 3 weeks or so. So it's definitely a bit normal to see them doing a bit of minor consolidation over here. So to me, what I could see over here, there's still no clear sign of a major reversal to potentially say that we are now start of a kind of a 20% correction for stock market yet. So it's more of a consolidation phase in the US market that's been fit over to this today's current negative sentiment over in Asia. Yeah.
Now, the negative sentiment in Asia really started off with retail sales numbers declining 0.6% in September from a year earlier. That was released this morning in Japan. But the BOJ kept monetary policy unchanged.
Yes.
And they also cut their real GDP growth and consumer inflation forecast for fiscal year 21. That, I suppose, Kelvin, then has weighed into sentiment.
Yeah, so that's a kind of a signal impacting that, hey, one of the Asia largest economy, we are now still in the doldrums. I mean, it hasn't really recovered yet. But what we could see over here is that means BOJ itself being a major developed nation central bank, they are still very unreluctant to actually normalize their ultra loose monetary policy for at least a year or so in going forward. So versus the rest of the world where you start to see the one that's most hawkish, developed nation-wise, will be Bank of England and Bank of Canada, based on their recent hawkish stance in their latest monetary policy decision.
Now, if you want to look ahead, we'll be looking this evening to the ECB monetary policy meeting tonight.
Yes.
What's your view on what the market is looking out for?
Okay, so right now, right, the next quarterly review meeting on their quantitative easing policy will be in December rather than this meeting. So this meeting will be pretty much unchanged in terms of decision wise, and in terms of, I mean, there's no decision to be taken on the interest rate adjustment, will be still at negative 0.5%. Same amount of quantitative easing program until they review it again in December. So what's key over here will be the ECB president press conference that was come out later. Because right now, right, there's still some, because given that the global supply crunch in energy prices has caused a pickup in inflation risk in Europe. as per se. So if you look at Eurozone inflation data based on the last one in September, it's up 3.4% year on year. So that's actually the highest rate since the global financial crisis in September 2008. And so beyond ECB target of 2%. Okay, so but however, what's interesting over here is the previous meeting, what ECB actually projected is that inflation pressure is to be temporary. That means they actually expect inflation to ease off towards the end of the year at 2.2%, ending this year at 2.2%. That means down from what we see in 3.4%, and also falling to 1.7% next year, and as low as 1.5% in 2023. So based on this projected set of, I would say, downward trending inflation numbers going forward in Eurozone, what does ECB actually imply? ECB actually imply to us that, hey, we are actually no hurry in hiking interest rate because we still have a firm stance that inflationary is still transaction temporary, I would say, rather than persistent. So that's why this time around the press conference will be very much interesting to hear what's ECB president take on this inflationary number, given the latest set of data that's being out now in the rest of the world, that is definitely impacting Eurozone as well, which is most pressing will be number one, higher energy prices that is feeding on into the rest of the commodity space. So that will be pretty much interesting to see. And also, what's interesting over here is that given that the stark contrast between ECB and the rest of the world, especially Bank of England. So Bank of England has really announced that, hey, they're going to hike rates even before I actually starts to actually embark on bond reduction. So they're going to hike rates before doing what I call a reduction in the quantitative easing program before this year ends. So what we could see now is that the cross rate, so one of the cross rate that traders actually tend to monitor is between the Euro Sterling cross rate, because right now, given the stark difference between Eurozone and UK, the pressure now is for actually the Euro currency to depreciate against the Sterling pound. So right now, if you look at the Euro Sterling cross rate has been declining steadily since I would say that since May this year, it's been a very slow trajectory. So right now it's approaching a key support level, which is at 0.8305. 0.8305. So that's the low was seen in 5 years ago, December 2016. So if the Euro sterling managed to have a clear break below this 0.8305 major support level, it could potentially trigger a much severe or what I call significant deceleration on the downside for the Euro sterling rate. So I think traders will be going forward, especially this meeting itself, in the next 3 weeks or so, to actually monitor this Euro sterling rate very closely at this level.
Now, Kelvin, thank you very much for your insights today.
Thank you, Brian. My pleasure.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. This video and podcast will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.